All right, guys, it's a pretty big day today, a lot of news. We're going to cover it all, don't worry. If you want to skip to the part you're most interested in, I always make sure to timestamp my video down below. You can get right to it. And then I try to include a too long didn't watch summary at the end. So if you want to spend 3 minutes hearing the short and sweet of it, I've got that too. But for those of you who want a little extra, we're going to start here. So in particular, we're talking about reflexivity, Pareto, Wyckoff, and patience. We made a whole video on this. If you've never seen it, I would encourage you to go back and watch it. But we're going to expand on this right here. And what you're looking at right here is a mining rig, one of a couple that I had built years ago, like 2017, early 2017. And the reason I'm showing you this is I'm going to use it as a really good segue into a broader point, okay? I'm going to try to help illustrate for you really good examples of people just like us in times in the market just like this one. And I'm going to try to give you some perspective on what's going on and why you feel the way you feel, this human psychology that we can all relate to each other on right now, this wavelength of uncertainty and all this. I'm going to try to help illustrate how this is why things like Wyckoff work in the first place. This is reflexivity in action. I'm going to try to help illustrate this for you and try to give you a little bit of confidence. So first of all, remember that I try to do a really good job to remind you guys that there's narrative and then there's reality. And these things are mutually exclusive and they can exist at the same time and they can impact each other. But the narrative almost always wins out on day-to-day market activity. Even though fundamentals ultimately win in the end, they typically win on a shorter basis, on a shorter timeline. Okay, until they become narrative. Once fundamentals become narrative, then they just, nothing can stop it because reality is now also the narrative, all right? But until those both things are both true at the same time, then there's going to be divergence in your expectations versus what you see playing out in real time. So keep that in mind as we go on. These photos are actually from when I was taking photos of the mine to sell it. I sold these mines. So you have to understand that when I got into crypto, I didn't like the stuff in the first place, and I still don't. I don't believe in it. I don't see any use for it. I don't want to be caught holding the bags in it. I've been talking about it selling off for a long time. I've got videos on this talking about this moment in crypto right now coming, okay? And I've talked about the fundamentals of crypto, that you don't want to own it as long as the Fed is reducing their balance sheet or threatening to reduce their balance sheet, certainly raising interest rates. This is how Bitcoin works. And a lot of people don't want to hear that. They don't want to even attempt to understand it, but that's the reality. So what am I getting at? Is that even though I don't like the stuff and I never have, I still invested in it, okay? And I built these mining rigs and started mining Ether when it was like $20, $30. And so I was really early, okay? But the thing about it wasn't too long after I started that the price of all these video cards just shot up exponentially. I mean, even the power supply shot up exponentially. Everything became out of stock. Okay, so the thing is that even though I got in and I made a lot of money, I wasn't right about it. Okay, at the end of the day, yeah, I cashed in. Okay, and we'll talk about that next or later. But the thing about it is that I barely got it in. Okay, I barely got in. And when you barely get into something, you're not right about it. You're lucky. All right, you're lucky. And I'm going to show you a clear distinction in what that looks like. This guy was not lucky. This guy was right. And the difference is that he called it way in advance. Okay, in fact, he lost a lot of money along the way because he was right too early. Okay, and the reason why it cost him so much money is because he took all of his positions betting against the housing crisis so early that he had to pay premiums over the course of years, right, to keep these positions that he invested in, right? So as his portfolio began to roll over and roll over and roll over and roll over and roll over, he kept having to pay for that position to keep it, all right, until eventually he was redeemed, okay? Eventually he got it right, and he made an absolute fortune, all right, over $1 billion, okay? But he was early, and being early cost him. Okay. And there are people who got in the day before when they realized what was happening. They just got their orders in, just got in at the nick of time. Those people weren't right about anything. Not a damn thing. Okay. They were just lucky. Lucky they were able to get their bids met, right, before everything rolled over. And there's a difference. So even though person A, being Michael Burry, and person B, the person that got in at the last second, both made money, only one of them was right. Another legend in the space, you all know this handsome devil, right? This is Rick Rule. Okay, so despite everything you probably already know about Rick Rule, one of his most famous stories is the Paladin story, where eventually he made 100x, but before he did, Paladin rolled all the way down to a penny. Okay, a penny, and he lost 90% of his investment, and or more. I don't remember the exact numbers, but it was substantial. It was most of it, almost all of it. And when he got to that point, he had a decision to make. Like, am I wrong about this? All right, or do I need to be buying more? All right, and what did he do? He bought more at a penny. Okay. And ultimately, he made a fortune. I mean, that's what helped him make his name for himself, was this spectacular trade by doubling down on his convictions that he was in the right place, in the right trade at the right time. So in my example for myself, I wasn't necessarily right about it. I kind of got lucky, right? Because I almost missed the whole thing. But the thing about it is, because even if I wanted to get in, I wouldn't have been able to, because there was no hardware, right? We just went through that recently, okay? And that's your sign that the top is in, okay? And I recognize this. So even though I was lucky enough to get in back here as far as timing, as soon as that demand shot up and everything was out of inventory, I knew that that was a top, right? That was a signal to get out. And that's why I sold these things, okay? You can even see in my photo that, this is the date, when I was taking pictures to start selling this stuff, right? And so even though I was early to get out, I got it right? Because it only took a couple more months before it all rolled over. They call it crypto winter, all right? So I want to make something clear to you that being early goes both ways, and sometimes it costs you money, because being in early can, allow you to experience more downside, all right? And it can also cause you to miss upside, right? Because if I would have held on a couple of more months, I probably could have made 15,000 on these mining rigs, right? Instead, I made 12. Do you think I'm crying about that? No. It's like when you identify the reality of it, you gotta act on it, okay? Because the narrative is eventually going to catch up, all right? And the key kind of trading environment you're looking for is when narrative and reality collide. And we'll get to how uranium and gold and silver will collide with the reality soon. But right now, we're going to talk about the most recent example we've been talking about since the inception of this channel, which was the reality of our broad markets rolling over, okay? The reality of the debt market collapsing, okay? So this is a reality we saw coming that has now made its way into the narrative. Now, all of a sudden, people care. Now, all of a sudden, people are talking about it, right? Even though you could have saw it coming. So it's kind of the same way, right now, the broad market is turning bear. So even though fundamentally uranium and gold and silver are extremely bullish and undervalued, all right, nothing about that has changed. In fact, it's like every single day uranium becomes more bullish. It gets more tailwinds. It's the most absurd thing I've ever seen. Something could be so bullish like uranium is. It's just almost hard to believe. It's almost scary, honestly. Right? But you're going to have to just deal with the narrative for a little bit, right? And the narrative is just allowing the Fed and the markets to push us around, all right? And you have to recognize and have conviction that you're in the right place. So even though I'll go ahead and click uranium, even though, I get it. You might have bought up here. Hell, you might have bought up here. I get that. And I can appreciate how you might feel about that. But understand, maybe how this guy felt. Because he lost like 99% of what he invested, right? Or 90% of what he invested, and he just bought more. And it worked out well for him. Now, I'm not encouraging you to, chase, spend good money chasing after bad money. It's not what I'm saying. But just like we've talked about in this channel many times in the past, we've already identified and assessed that we are in the right space for the right reasons. We've already done a fundamentals gut check. Even though it's kind of low level, it's still all true. All these things are fundamentally true. And these things are fundamentally, inevitably going higher. So as long as your time horizon is out here on this axis, right? As long as you don't need your money that's in your brokerage account next week, then seriously, you just need to have some perspective. You need to zoom out and just appreciate that it's all going to be okay, right? Yeah, you got to appreciate that as these markets roll over, they're rolling over for a very particular reason that is bullish long-term for commodities, okay? So this might be really bad long-term for tech stocks, all right? This might be bad for Tesla. Okay, this might be bad for the Netflixes and stuff, but it's really good for uranium, and it's really good for gold, and it's really good for silver. So even though your timing may not have been the best, just understand and appreciate that the timing works both ways too. And as long as you have enough time to wait to realize these gains, your biggest concern is not how much you're down right now, right? It's about getting out, getting out in time before it rolls over at the top. Does that make more sense? I mean, I just wouldn't worry about it. I'm just trying to give you guys a little lesson on this and understand. Again, I wanted to follow up that I've been trying to teach you guys about Wyckoff and everything throughout this whole process, right? It's like, look at where our price is trying to get back above. How long have we had this $6.08 price there? I mean, since up here, we've had it up here, right? When I made that video, right, we made it right here over a month ago. I think it's like 5 weeks ago. We talked about Wyckoff emerging in uranium, and we had 40% downside to look forward to. And I'm showing you this to remind you, that we just didn't make these numbers up. I mean, this was based off of Wyckoff that we saw in advance. It's part of how we knew this move was coming because it had confluence with the 10-year. Okay, so we saw this approaching this as commodities all over the place. How many times did we talk about confluence and all of the commodities charting the same pattern, same flags? It all looked the same, right? And it was giving us our answer. Right? It was telling us that this was coming. Okay, you were getting distribution. We were about to get dunked on, and then we had two prices. We had this price to buy, and then we had this price to buy. All right, because we knew where our stops would be, and it's not a coincidence, you guys, that we got test on both of these levels. In fact, if you look in on the hourly chart, I mean, look at that. Look at the perfect to the penny precision that we were bouncing on this number. So even though it bounced further down than I anticipated, remember I gave myself 2% worth of leeway. We're down 4.5% further than my price target. So 2% would have been, 2021. Even still, clearly that's the right price. I mean, look how it's acting like a magnet. The price just keeps coming back here and gets denied. I've had this price here for how long? Like weeks. So what's the point? Why am I starting back over from the beginning and rehashing Wyckoff and everything? It's because I told you what to look for and how it kind of worked. But in case you didn't realize, in case you haven't gone and done more research on your own, you need to understand that what Wyckoff is. And Wyckoff quite literally is manipulation. All right. So if you've ever felt like the markets were rigged, well, that's what Wyckoff is. Okay. And then this is true, because what it does is it works based on your human emotion, okay? And the way the price action moves and how it pulls you in and pulls you out and pulls you in and pulls you out, it's designed to fleece you. Okay, that's how it was discovered. So look, just go do some reading, go do some, self-educating and learn about this stuff. It might seem complicated at first. It might seem like there's a lot to it, but honestly, there is. I mean, and if you really want to better yourself and see this stuff coming in advance, then you have to take the time to learn it. Okay, so I can do more videos to expand on it and simplify it in the future, but really you got to take your own initiative for yourself. And so I've talked to you about Wyckoff distribution mostly, but it works in the opposite too, because when they're accumulating, right, when they're building positions, it's the same thing that we've been talking about. It's just upside down. All right, it really is the same thing. It's just upside down. So you get this phase. Imagine if this were like we've been looking at in the past, you'd have lines coming down on both sides, but instead of this way, it goes up. So we'll talk about that more in the future, I guess. But just take the time so you can understand that this is how you spot manipulation. This is how you spot the markets being rigged. And it's designed psychologically on purpose, in a specific way, to make you feel like you're missing out and that it's, it's selling off, and you get back to these areas where you started from, and it gives you an opportunity to get back in or get back out. And it's intentionally, this works. That's why you see it all over the place. That's why it's constant. It's like once you see it, you can never unsee it. All right. It's the biggest red pill in the markets of all time. Learn Wyckoff. All right. It's just, you need to do it. I say all of that to say, in summary, is that when you know and can recognize when you're being manipulated, when you can see it coming, then you can prepare for it, not be shaken out, and understand what happens next. They're just going to start accumulating next. All right, this is why this was my lower level price target, because I know once we finish the Wyckoff cycle, right, the next thing to do is to accumulate to build up for the next leg up. Okay, so that's coming. All right. Everything is fundamentally bullish about this market. I'm still buying. Technically, I've spent my cash. I'm working on rotating some things to gather some more. All right. Because there are some things that I want to own. And I'm not going to make any stupid decisions to make that happen. But if I can work some things out, I will, because I want to own more at these prices. And I know that what we're going through is just designed to get you shaken out. All right. So just trust me, have faith. Just hold steady, hold tight. Everything's going to be okay. You're not the first person to live through this. You won't be the last, but certainly you can be one of the few who don't screw it up and make a lot of money in the end. Markets in part are reacting to the CPI print this morning. On one hand, it was a lower print than the prior month, but it was still higher than expectations. So there's an argument over the narrative between the bulls and the bears of how big of a deal it is, right? Some are saying that this is really positive. Others are saying, oh, look how high it still is. They can't rein it in. And ultimately, remember, fundamentally, it doesn't matter because they can't actually do anything about it anyway, right? This is all noise and nonsense. And even in the case of whoever this is, just totally fake news. I mean, look, they're trying to compare current inflation rates to the past, even though they don't measure it the same. If we measured inflation the same here as we used to back then, we'd be well above this number. We'd be over 15%. We're going to start with the bond market, and this is a pretty big deal since once we broke out, we are now turning around and coming back for the retest. I don't think this little area here counted much as a retest, but this one will. So what happens next will be very indicative of what to expect in the coming weeks and months. So do we break down on a failed breakout and reverse trend, or do we retest and break up for another leg? You need to be watching this very closely. Obviously, if we retest and take another leg up, it's going to be very painful for the markets broadly. Now, as bad as things look and really technically are for the broad markets, I will say that on the NASDAQ, on the weekly, you have hit the 200 moving average, which if you look historically, it has precedent for not really wanting to get below it. In fact, on my lower indicator down here, this really just tells you your distance from the 200 moving average, okay? So on the weekly, our distance from the 200 is, basically zero because we're on it. And historically, we almost never go below this number. And if we do, it is very short-lived. So I just want to show you that, if we're going to bounce, it's probably going to be here. Now, with that being said, we broke through 12,000 like butter. I thought that this would be a strong contender for at least a dead cat bounce. Not only did you have the 12,000 psychological number, but you had the prior resistance that should have, acted as support here, and it didn't. It just fell right through. So that looks pretty ugly. Now, if I had to forecast where we might land in the future as more of a really, really strong contender for a bottom, a potential bottom, it would be here. At that February-March 2020 low at the onset of the pandemic. I've been saying for a long time in a lot of my earlier videos too that was kind of my ultimate target. But if I'm missing them along the way, I mean, who knows? But especially when you look at something like the S&P, because if you extrapolate over time, how long it might take to get there, then it makes sense that you might get a double confluence on a level like this, somewhere around 3,400 or another one of these triple tops, okay? Somewhere out here. I mean, it's all possible. So I would say somewhere between, 3,400 and, 3,600 on the S&P. But as we look at commodity spot prices, I mean, gold's doing fantastic. It's technically up on the year. It's green for the year, and it's chugging along. It's getting a nice bounce here at its long-term uptrend support. We are just slightly below my target of the 200. We fell about 1.5% below. Very good deal. And remember that this should have coincided with the 50 on the weekly, which it does. So that was a strong area of support. We came a little bit below it, but we are holding. It's, I'm kind of seeing the same thing across the board. I mean, we had our price targets, and so far we're falling a little bit below them. I think we're overshooting a little bit, but so far I don't think that we're wrong yet. I think this is still where you want to add. I think this is still where you want to buy your commodity equities, okay? So gold, silver, platinum, all this stuff, I think you're still at the strong buy area right now. Now, if we get further downside, it'll be time to start acknowledging that maybe I was wrong about the buy zone, okay? But right now, I think it's actually holding up quite well. Silver is getting absolutely decimated, and I just cannot help but feel like this is going to just rip people's faces off. I mean, silver is so oversold, it just doesn't even make sense. And, I am absolutely all aboard silver equities right now. I'm all over it. And even physical silver, I haven't looked at the premiums today, but, you know, prices down this low, I'm just not sure how much lower you get. You got to buy the 200. Right, and that you haven't been at the 200 since pre-COVID crash. So that's an excellent steal for something that's already undervalued at this price. Physical uranium is coming down to our first target right there. Remember, we talked about not really paying too much attention to the spot prices because we knew that they had long-term upside, right? Their only destiny was to go higher, and that they weren't going to sell off as much as the equities would. So really what you should be doing is looking for weakness in equities and buying at strong supports on those, right? But even still, we are approaching and have already approached in gold and silver massive technical supports. And our support for uranium was $51. We're only a few cents away from that. This is a zoomed out view of SIL. We're going to look at silver miners first. So you had this long-term pennant here, okay? And we broke out above it, and we came down for a retest, and then now we've broken down below it again. But it has caught support on its major lower support trend, okay? And in cases like this, I think that the COVID crash is an anomaly, and I think you just run right through it in situations like this where you get clear support. And being that it stopped here, I don't think it's a coincidence. I think it just further validates the trend. I think this is an extraordinarily bullish buy. Absolutely. AG is running down to the same thing. It's lower absolute low of an ascending support. We broke through that 930. I'm really surprised at this. I obviously got this wrong. Okay, I got this wrong, and I apologize for that. It obviously had more downside than I anticipated. Silver has really just been decimated. But with that being said, you are coming to strong confluence of prior support levels down here. You really have no business being down here. I think between here and this support line, about $7.60. I mean, if you're looking to get into silver, we are extraordinarily oversold. Even the technicals are screaming buy. But when you look at a chart like EXK, it had a massive rally today, up 18% at one point, all the way up to our original second buy zone. Okay, and it got denied there pretty hard. We'll actually switch to the daily. So you see that upper wick? That's actually a pretty bad sign. It's like after a rally that it had, it still managed to sell off. So that's really telling you that there's no confidence in this market yet, okay? People are using rallies to sell. And remember, this was part of our strategy too at the end of the last video. I was telling you, like, look, if you've got stuff you need to renegotiate in your portfolio, right, reallocate, then that's, you need to use rallies to do that if you can get up to even or even a profit on things that you might not want to hold. And so people are obviously doing that. They have no faith, so they're selling off. So in the short term, that's a bad sign. But it's also kind of when you want to be buying. I know that sounds counterintuitive, but when people just don't believe that there's any upside left, that's usually when you start accumulating. But it's really better to look at the major multi-billion dollar leaders, okay? And you can see that it is clearly not broken down below its ascending trend either. In fact, it has a little bit to go just to get to that Wyckoff, okay? So technically the big names are still kind of right in line with what you would expect on the sell-off based on everything we've talked about in the past, right? And even for Newmont, we were looking at the 50 on the weekly, okay? And we still haven't hit that yet. So as bad as it seems, the big guys are just now kind of getting to where they need to go. I think the thing that I got wrong from gold, silver, and uranium is that I kind of gave them all the same target, right? I gave them all the same lower end of the Wyckoff. What it's really doing is that the big names are hitting that, and then the lesser names and those with lower market caps are selling off below it. So that's a good thing to remember in the future. Of course, assuming that we hold here, assuming that the big names don't roll below those numbers, because if they do, then we'll end up getting it wrong. But until that happens, I think that's the takeaway for now. But beyond that, there are signs of confluence that we are at or very near a bottom. You have companies like Kinross Gold that are at the very bottom of a very long-standing channel, or you have Wheaton Precious Metals, for example, that's back testing a breakout. which is a totally healthy, normal thing to do. Very good sign. And companies like Vail are holding up pretty well too, getting nice bounces on the 200. And so you're seeing this confluence of things across the board, and it just gives me confidence that we're still on track. I know it. If you're watching the markets all the time, right, it feels really ugly. And depending on what you're in, it might really be ugly. But I would encourage you to watch the prelude to this video again and just kind of keep things in mind that we are still technically right where we expected to be. We did get some overshoot in some of the smaller market cap companies, but the big guys, right, like the Camicos and stuff, they're right there. They're right there at that Wyckoff. So I wouldn't worry yet. I would just look to see, honestly, if we can get wicks. We want wicks on these weeklies, okay? Because if we get, this is kind of in the way, but if we get a long candle like this with no wick on the bottom, I'll start getting kind of nervous, to be honest with you, all right? So what I'm really seeing in gold, silver, precious metals, right, is gold's holding up extremely well. Silver was absolutely decimated, but the majors, okay, in each sector are holding up extremely well. And I think that unless they break those hard levels that we were looking at, those number 2 buys, right, those Wyckoff levels, then I think that we should expect everything to be okay, right? Because we're exactly where we're supposed to be. Or in some cases, we haven't even quite got there yet. So you shouldn't be freaking out. You should still technically be following the strategy and buying, okay? We're going to start uranium with Sprott Physical. And when I look at this chart, it makes me feel like I'm looking at silver all over again. It's just so oversold that it just doesn't make sense, right? It just it just drives you crazy. But I mean, look at it zoomed out from this kind of perspective. You can go all the way back to September 21 to find this price. That's how far back you can go to match this price. So if you feel like the whole time, oh, I wish I would have gotten your uranium sooner, I wish I wouldn't have missed it. Do you understand what this is literally handing you an opportunity to get in here? Okay. And so when I was telling people that the crash was coming, nobody wanted to listen. Now when it happened, nobody wants to buy because it's too bearish. It's like, do you understand? I'm trying to like show you this is how you do it, right? Like this is the time to buy. This is the time when there's blood in the streets. And this is when you have to act. And this is why I preach about confidence, because not only do we have the concept and talk about everything happening like in advance, we had our buy prices in advance. And the reason why we had our buy prices in advance was that so when they came, you would have the confidence to act on them. And if you don't act on these buys, if you don't buy when it gets this low, then what's the point of looking at this stuff in the first place? URA coming a bit below, about 5% below our target. That's okay. We have not yet broken below this, so there's really no technical damage to the chart in terms of setting higher highs and higher lows. But even with that being said, I want you to understand, I had a couple of people asking me if we were getting a head and shoulders, okay? And, you know, I do see it, but here's the thing. Here's how you play it. First of all, you have broken below on not that much volume. So unless there's any follow through tomorrow, I would not expect it to happen. So the way you would play it, let's assume this is a real strong head and shoulders popping out here across the sector, okay? What you would do is wait for it to break down like it has, and then check the volume, which it lacks, does not have it. Number 2, you would wait for the retest, all right? Because if this is a genuine head and shoulders, there's a high probability that you will come back for the retest. And if upon this retest, you cannot break back above this trend line, all right, and then you turn around and start rolling over again, that's when you open your short, okay, because that's a pretty good sign that it's rolling over. But until that happens, you do not assume that this has broken. You do not assume that this is legitimate. You do not assume anything. You just wait for the market to tell you. Same thing with URNM. You know, it's holding at the same spot, right? We had this previous double bottom pattern right here, and we're holding on the top of it. And that's kind of across the board what we're going to see. You know, same thing. We didn't break below this lower pivot here. So it's really kind of do or die right now. So we're going to know this week, probably at the end of the week, where we stand. And honestly, what I'm really looking for are the wicks on the weekly, because it's okay to come down here like this, especially if we were to get a nice long wick up You know, even on a Friday, wait all the way till Friday. That's fine with me. You just get that wick and put us back up here, and I will be entirely content with everything that's going on, okay? And it will validate our position of where we bought. This should act like a magnet, and we'll be okay. But honestly, if you start breaking down too much further, you get down here, then, you know, the game has changed. LEU, we have a new target all the way down here around $9-10. I will not touch it again until we get at least that far down. This company really doesn't have anything going for it anymore. And if you're a bag holder, you really need to consider your exposure and you know, how much you really believe in this company's future, because right now it just doesn't sound good. The alternative to LEU, however, is holding up very well. On the weekly, it's touching its 50 and it's staying in this ascending channel. So hey, if you want an alternative, if you just have to have money invested in an LEU type company, a Centrus Energy type company, then this might be where you go. So just like URA and URNM, we are testing this level right here on this prior double bottom at the top of that W. We're testing here as well. Again, it's make or break. You're really getting a check on your convictions right now. I have added this here too, checking out the same pattern that we looked at earlier on URA. And on NXC, we have not broken down yet. NXC looks really good. And as a leader, that's what you see. That's what you want to see, excuse me. And including, you know, Cameco. Cameco looks really good. Let me delete this for a second. So Cameco, put it on the daily. We have fallen out of the channel, but we still have not even made it to a full Wyckoff target yet. So as long as the leaders are still looking like this, I understand some of the other names might fall a little bit further than we projected, but like I talked about earlier in silver and in the intro, as long as the big guys don't fall down, I think you're good. All right. I was wrong to put them all at the same price. Obviously, in retrospect, the weaker names didn't hold up as well, but the big names are doing exactly what they're supposed to do. Therefore, I am convinced still that we are right on this call. Now, it is interesting if you actually look at the hourly chart, and by the way, this is the only excuse you will ever have to look at an hourly chart, is to see the price action and where the volume came from. Somebody was buying some fission uranium today. In fact, they were buying some global atomic today. They were buying some URA today. If you break down the charts by hour, we're setting some record volume on the hourly chart. Okay, so some major buyers were stepping in and taking positions at some of these lower prices. And so like I told you, how once you get to the bottom of the Wyckoff, people start accumulating. Well, that's already being validated because that's already happened in some of these big names. We are setting massive, 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 historically meaningful volume on the hourly chart. So major buyers were coming in, taking big positions at these levels. And I just want to point that out because that's exactly what we anticipated, right? That's the whole point of the Wyckoff, right? The end of the Wyckoff and why we price here. So I just want you to keep this in the back of your mind as prices kind of fall down here and it looks scary. What's going on? We're going to look at GDX to URA ratio right now, and we are threatening a breakout on this inverse head and shoulders. So in the big picture, this ascending channel was validated multiple times. It's especially clear to see on the daily. And we broke down out of the channel, returned, which is very bullish, by the way, came back down, retested it, and have now formed an inverse head and shoulders. If you look at gold ratios to pretty much anything, I mean, gold is absolutely ready to break out against most things, whether it's tech. Look at energy. Look at how oversold on major technicals we are hitting GDX on XLE. I mean, everything you look at, whether it's GDX or gold in a ratio to something else, it is screaming. It is screaming that gold is about to explode. GDX is about to explode. Or at minimum, it's about to fall a lot less than everything else, right? It looks so good. I cannot tell you how bullish I am on gold right now. I mean, I'm just in love with gold right now. I mean, look at it coming up to break out of this descending wedge. Do you know how bullish this is going to be when it explodes up out of here? Jesus. This is gold to NASDAQ. It's just getting ready to pop out of here. And, you know, we're going to have to watch this because, you know, it doesn't even touch the 200 that often or get above the 50 that often. And you can see what's happening, guys. I think the paradigm is shifting. I think we are right about everything. I think you just have to remain calm, hold your convictions, understand that you are being manipulated out of your position so that you miss the boat. Hold, keep buying. I had tweeted about Arianne Phosphate. There's a lot of news coming out about, Biden's out making press conferences about how we have to support our agricultural industry. And look, they're about to print so much money to prop all this crap up and to make up for their dumb mistakes and sanctions. You don't even understand that this is coming, guys. It's coming. They will find an excuse to print. And all this money is coming to get funneled into commodities because it has to. Because you have to funnel into your own national commodity base if you're not buying them from other countries, right? And we cut off Russia, so we got to do it ourselves. So this is an inevitability that I tweeted right here at this price that Arianne Phosphate was a good buy. And so far we have had a good bounce. I would still encourage you to get in if you don't have any exposure. At least get a small tranche, get your feet wet, because I think that this is a strong buy. Long-term stocks like this are just going to keep going up. He's talking about supporting our agricultural industry. What do you think is going to happen to fertilizer stocks? I mean, these things are just poised to explode. Now, I will say that I don't like this nutrient chart very much. I mean, it kind of gives me the heebie-jeebies. I can't get a good read on it. It looks like it wants to roll over, but, it could also be doing a spring here. I'm just going to have to watch this one and see. I think if you're holding Nutrien, then you keep holding. But I think if you're looking to get in, you kind of want to keep waiting. See if you can get a breakdown down here at the $80 level or so. Let's look at it on the weekly. Yeah, it's about the same place. There's confluence with the 50 and the trend line. So let's scoot that out. They're like right there. Yeah. I mean, I'd be looking for something like that. That'd be a really strong buy. I mean, how can these things possibly go down when they're talking about finally in the open, in the public, about our food shortages that are coming? Biden's out there talking about how we're going to make up for the shortages from Ukraine. So how are we going to make up for those shortages if we don't have fertilizer to get the same yields we have in the past? I mean, this is all about to fall apart, okay? And so when you recognize these kinds of fundamentals, you can know that the narrative is BS, right? And that you just need to be buying these things when they get cheap, right? And you get down to this 50 on the weekly on this trend line and some potash, this is cheap, right? And so I'm a buyer. I'm a hard buyer. Even with Vital Metals, I mean, it had major bullish news. It got a nice deal with a European company. Cash flow's coming in. It's just suffering like the rest of the market. So this is on sale. This is something that's just ready to go, and it's on sale. The market is just giving you an opportunity to buy something that is undervalued. The only thing that can stop oil is just a loss of demand. So if we go into a recession or depression, there goes oil. But until then, I mean, it has probably been the safest trade with the fewest downturns and probably the most asymmetric, even more to uranium to this point. I think long-term, uranium is a substantially more asymmetric trade than oil because oil's already up here, right? And all the equities are up here. Uranium still has a long way to go. But really, if you come back here to the pivot, if you come back down to the crash, I mean, there's really been little better than oil. What a good trade. Still looks good to me. I think it just really comes down to the Fed and the money printing and, how far they let things roll over. Only demand can kill oil at this point. So listen, guys, the too long didn't watch would be just to hold tight, okay? Hold tight. The big names, the big players across all the sectors individually and broadly speaking are doing what they're supposed to be doing. They're just now hitting those Wyckoff targets, right? They're just now hitting those second price targets, those lower bounds. They haven't invalidated those yet. Everything is still on track. If you have a smaller market cap, some of those guys did break our levels, and that's my fault because I gave them all the same price target, right? When in retrospect, it should have been pretty clear that I shouldn't have done that. But with that being said, until the majors break those targets, we are exactly on track and right where we expected to be. So consider the lower market cap players to be even better deals. I don't see any reason to change the strategy yet, not until further downside is realized on meaningful volume. I think that this is where people really get shaken out here. This is the true test right here. This is the line in the sand. This is the gut check, all right? And you can feel it. You can feel the tension in the markets. You can feel the fear. This is when you buy. Hold tight.